It's time for the Your Personal Bank Show with Ferenc Toth. In an era of chaos, confusion, and craziness, Ferenc is a voice for common sense. As a financial literacy educator, speaker, and entrepreneur, Ferenc cuts through the noise to help us understand how current events affect our money, economy, and our freedom. Now, here's Ferenc Toth.
Welcome to the Your Personal Bank Show. This is Ferenc. One of the things I try to do with this show is to cut through the noise and use common sense to explain how economics and policies affect our money and help us make better financial decisions. And recently, it seems like everyone is talking about tariffs. So I want to try to apply some of that common sense and what's going on to this show. First of all, the S&P 500 has dropped, which is officially a correction. There's a number of reasons behind this, and I want to discuss those. But first, before I get into that, a lot of it has to do with the economic policies that we're seeing with the Trump administration. Now, first of all, the challenge is with a lot of people is Trump does elicit strong emotions from many people. The problem is strong emotions cloud clear thinking. There are people who love Trump, and there's others who hate him, and then there are others who don't necessarily particularly like his personality, but they do like his policies. And I would say I tend to fit in the last category. I don't have strong emotions regarding Trump. Just like with any politician, I focus on what they do. What you do speaks so loudly that what you say I cannot hear. And I think that does help me stay more clear-headed than many that you see in the media or individuals, that type of thing. Now, perhaps to help some of you, instead of focusing on Trump and his administration, maybe just replace it with the current administration. Think about it in those terms, and that might help you stay a little bit more clear-headed. So what is the plan of the current administration? Well, it's become clear from their statements, from their actions, that they have some very big goals. Their plan involves far more than tariffs. You see, the tariffs are primarily being used as a tool to accomplish their goals. You know, the tariffs are on, then they're off, then they're delayed. It's really hard to keep track, and it's just all part of the negotiation process. Now, it does create some uncertainty, and the stock market hates uncertainty. So I'm going to tell you, expect volatility ahead until this process is resolved. Now, even Trump, in his address to the joint session of Congress, stated that there will be a transition period. You see, the current administration is upending decades of economic status quo. And if you think about it, it's really not Trump causing the uncertainty. He's made his goals regarding tariffs very clear. He wants fair trade, not free trade. It's the other countries' responses that are causing the uncertainty. They've enjoyed decades of favorable trade relations. In fact, many countries have taken advantage of the U.S., putting significant tariffs on their products, while we don't put little or no tariffs on them. You see, if these countries would just realize that the game has changed, the situation has changed, the free ride is over. Because Trump is serious, the current administration is serious about fair trade. And if these other countries would just settle on a fair tariff deal, well, the chaos would end. And I'm going to share this later, but here's some of the goals of the current administration. Again, they want fair trade rather than free trade. Many countries have taken advantage of the U.S. for decades. Canada is a perfect example of an ally, a close friend, yet many of their goods have anywhere from 2 to upwards of 300% tariffs. Things like milk, cheese, butter, chicken, etc. The U.S. has little or no tariffs on those products. So if a U.S. producer wants to sell milk or chicken, for example, to the Canadian market, they often face a 2 or 300% tariff, which means that market is essentially closed to them. Yet if a Canadian producer wants to sell into the U.S., there's little or no tariffs. So our markets are open to them, yet their markets are not open to us. How is that fair? It's a very good point that the current administration makes. You see, reciprocal tariffs are fair. It stops the U.S. from being taken advantage of. You see, making things in the U.S. will eliminate the tariff. And that's where it brings to the next key point of the current administration. Their big goal is to bring manufacturing back to the U.S. They want the U.S. to build things again or produce things again. So if these companies decide they don't want to face the reciprocal tariff, whatever it may be, they can just produce it here. And see, the current administration wants the U.S. to build things again. In fact, the U.S. barely builds anything anymore. A great example is shipping, ships, both commercial and military. Only one of China's shipyards builds the equivalent amount of shipping, roughly, as the entire U.S. shipping industry. And China has multiple shipyards. Now, that's a national security issue, but it also increases good paying jobs for Americans if we start building things here again, like ships. Another major goal of the current administration is they want to reduce government spending. Excess government spending, we've talked about this on the show many, many times, causes inflation. It's government spending that causes inflation. Almost nothing else does. And government spending has exploded. The overall debt and deficit spending, the levels are completely unsustainable. If these levels of spending are allowed to continue, the U.S. will go bankrupt. And if the U.S. goes bankrupt, you are talking about economic chaos worldwide. This is something we definitely want to avoid. We're not there yet. I've used this analogy many times. It's like we're on the Titanic and we see the iceberg ahead. Now, we're headed right for it. We can turn the wheel and avoid the iceberg, but we don't have much time to do that. And the question I've been asking for a while until recently is, will we turn the wheel? Will we turn the wheel in time, or are we going to hit the iceberg and create an economic chaos situation where the U.S. it would essentially go bankrupt? Now, I'm not saying there's going to file a bankruptcy per se, but there's a whole lot of ugly things that would happen if foreign investors or investors in general balked at purchasing U.S. debt, bonds, for example, because they're spending too much. There's a lot of ugly things that would happen. And again, I believe that we're going to be able to avoid this. If the current administration is successful in their goals, they will avoid that economic chaos. That's a good thing. They also want, by eliminating waste, fraud, and theft, and that's what it is. It's stealing, also helps reduce spending. And that's the main project of DOGE, the Department of Government Efficiency. It's amazing that there's anybody against waste, fraud, and theft. Frankly, the only people that are complaining about it, that are for it, are the ones benefiting from it. They're the thieves. And I'm thankful and glad that finally somebody is stepping up and addressing the issue to reduce the waste, fraud, and theft. Because the numbers we're seeing and the amounts are monumental. It's shocking. The positive side of that is it's because it's so significant, the amount of waste and fraud, that if that can be reduced by a significant amount, Elon has discussed reducing waste, fraud, and theft by upwards of $1 trillion a year. That's a stupendous amount of money and will help balance our budget. Not completely, but certainly would go a long ways towards it. And that would be a great result for our country and for everyone involved, except for the thieves who are receiving the money, frankly, the fraudsters. You see, the U.S. is financially in trouble. Elon has stated repeatedly, why is he doing what he's doing? He's firmly convinced that the country is going to go bankrupt if we don't do something. I agree. The math, the numbers, you can't argue with them. You got to kind of think of the current administration as a turnaround CEO. The country's in trouble financially, just like a company that gets in trouble financially. And when you bring in a turnaround CEO, it's challenging. It can get ugly. Cuts, significant cuts typically happen. It's not a fun process, but it's a necessary one to come out on the other side stronger, better, more efficient. This is the largest turnaround in the history of mankind because you're talking about turning around the largest entity to ever exist. And that's the U.S. government, financially, size-wise, numbers, all of that. This transition, again, will be volatile. It's going to take some time. It won't happen overnight. Probably not going to be great for the stock market. Probably going to struggle quite a bit. And even Elon and them have said their goal is to get to a balanced budget by 2026. Well, that's another year or so away, folks. So with these tariff negotiations with the different countries, the process of identifying and then eliminating waste and fraud and cuts and all this stuff, we're just at the beginning of all this process. It's going to take some time. My recommendation, buckle your seatbelts. If you have money at risk in the markets, again, probably going to be a struggle. We're in correction territory already. It could very likely get worse, a lot worse, before it gets better. See, our economy and our stock market has been feeding on excess government spending for years, if not decades, but certainly the last 5 years have been exponential growth. 40% of the dollars printed of all the dollars that exist have happened in the last 4 or 5 years. It's like a sugar high. It's like our economy and our stock markets and asset values are on this sugar rush. And anyone who's ever tried to go on a diet and significantly change what you're eating knows it's like a detox. It's a struggle. It's a challenge. There's a reaction, a strong reaction, or try to quit smoking or getting off drugs. Detoxing is very challenging and is a big struggle, but that's what we're dealing with. We're detoxing from this sugar high of excess government spending and excess printing of money. And it's so big, it's so large, it's so significant, it will take time to detox this out of the system. It probably will take a year or two, but it needs to be done. If it's not done, we will literally enter economic chaos. So I'm excited about the longer term future. But buckle your seatbelt, reduce your market risk. Your personal bank is a great option to park your money safely insured, guaranteed, highly liquid. Annuities are another great source of putting money away that's guaranteed, safe, guaranteed income riders. Never seen better numbers with annuities or life insurance dividends or guaranteed income riders. This is the golden age of fixed assets. It's worth considering to protect yourself from this volatility that is necessary for the longer term benefit that I believe we'll likely see. Stay tuned in the next segment. I'm going to share some more thoughts on this and some more ideas of really what to do. And like I said, cut through the noise, use some common sense, make better financial decisions. So stay tuned.
Stay tuned for more common sense from Ference. For more information, contact Ference at 866-268-4422 or yourpersonalbank.com. That's 866-268-4422. Welcome back to the Your Personal Bank Show with Ference Toth. Want more information? Contact Ference at 866-268-4422 or yourpersonalbank.com. That's 866-268-4422. Now back to the show with Ference Toth.
Welcome back to the Your Personal Bank Show. If you want to reach me, you can do so at yourpersonalbank.com. Yes, you will reach me. It's yourpersonalbank.com. So as I stated in the first segment, we're likely in for a period of volatility. The economy, tariffs, trade, we're going through a fundamental change. We're upending decades of the economic status quo when it comes to trade and tariffs and all these things that are going on. Taxes, the Trump administration is discussing eliminating the IRS and creating an external revenue service. That's astounding change. Very positive in the longer run, but the shift is the challenge. That's the volatility. We just got to ride this out. And that's why we're seeing the S&P 500 recently just closed in correction territory. We will see if this is going to continue. Personally, I believe this is just the beginning of this adjustment, this transition, this correction. And the reason why behind it, I'll share more. In fact, hedge funds and some of your big institutional investors sold global stocks at their fastest pace in 4 years in the period from March 7th through 10th. They've reduced their exposure to risk to the stock market. Again, it's the fastest drop of any magnitude of exposure to stocks in the markets by hedge funds, major institutional investors that we've seen since the 2020 COVID shutdowns. This is significant. And a lot of the institutional capital actually exited before the big decline in tech stocks. In fact, heading into the beginning of 2025, hedge fund exposure to the Magnificent Seven stocks fell to a 22-month low. So the big boys saw this coming, which they typically do. Now, a lot of people are using the trade war as the scapegoat. The real reason behind it, a lot of people believe, is the market's decline is a sudden shift in risk appetite. If you keep track of the gauges that measure greed and fear, literally the markets have gone from extreme greed to extreme fear in a matter of days. It's completely switched. The positioning is completely switched from, again, greed to fear. And some of the drawdown of the Magnificent Seven since the recent peaks, all of them are down by about 20% or more. Nvidia itself, for example, the darling, is down 25% from the peak. Tesla, which is getting hammered for multiple reasons, is down 50%. Part of that is the overall drawdown. All of them, again, are down about 20% or more. The Magnificent Seven, that is. They're the primary drivers, by the way, of the market increase over the past couple of years, particularly. Tesla is also facing additional challenges because of boycotts and etc. because of Elon's involvement with Doge and the Trump administration. There's a lot of protests involved with that. Now, why would Elon do that? World's richest man. He's a smart guy. He was beloved by the left. He number one producer of EV cars in the world. He's gone against their agenda. Now he's become one of their number one targets. The reality is, Elon himself has stated, he's doing this because even though he would be fine, he could succeed, he doesn't want to see his country fail. He believes as I stated in the first segment, if the amount of spending, the deficit spending and the debt was allowed to continue, the country would literally go bankrupt, and that would create truly economic chaos. And what a lot of people don't understand too and are not thinking about, Elon is an legal immigrant. And if you look at the legal immigrant communities, immigrants and first generation tend to be very patriotic. They love their country. They came here for a reason, for better opportunities. Elon shared that himself. I'm first generation. I've shared that story many times. My dad escaped the Soviets in '56 from Hungary, came here, became a citizen, loved this country, and instilled a lot of that in me, the first generation. You're legal immigrants who come here the right way, and their offspring, the first generation, tend to be some of the most patriotic citizens of the country. Because again, they understand where they came from, and many of them the sacrifices they made to get here. And they appreciate the opportunity that this country provides for them. I know I do. They appreciate it oftentimes far more than the citizens of this country, who many of them take it for granted. So I believe there are definitely some patriotic reasons why Elon's doing what he's doing. He doesn't have to do this. I mean, he's the world's richest man. Some of the numbers I've seen recently is he's lost about $100 billion of wealth in the last couple of months because of getting involved with Doge and the Trump administration and attempting to. What's ironic, he's focusing on reducing waste and fraud. People literally stealing money from the government, and really they're not stealing it from the government. The government has no money. Where do they get it from? Taxpayers. It's our money that these people are stealing. So isn't it ironic so many people are upset with Elon because he's identifying who is being wasteful and fraudulent, but the people aren't getting upset with the people who are doing the actual stealing. And by the way, they're stealing from you and I. Now, the majority of Americans get it, and that's good. And that's why his efforts with Doge and what they're doing are very popular, because they understand we work hard, blood, sweat, tears to build businesses or careers, whatever, and some of that money goes in taxes, and then to see that money just wasted on stupid stuff, so much of it is so ridiculous. It is. It's just theft. It's like somebody came in your house and just robbed you and then wasted, just took that money and just, went to Vegas and blew it, or, blew it on drugs and prostitutes and, and gambling. I mean, it's kind of the same thing. You know what I mean? And it's frustrating. It should make anyone who's a hardworking American angry because of the money being just so blatantly wasted and stolen and all that. The government should be a good steward of the money we give them. It should be transparent. They should have regular audits. We should know where our money goes. We deserve to know where our money goes and what it's used for. But anyway, kind of got off track there a little bit. I'm going to get into more of that. But the whole thing is about the markets, like I said, been discussing that, what's going on. The fear and greed indexes and stocks and crypto, by the way, have hit their lowest levels now in several years. Turns out the crypto last year saw extreme greed levels hit 92%. That means 92% of investors were bullish. It's now 17. I mean, that's a massive swing. You hardly ever see ranges that far, both either to the bullish or the bearish side. And sentiment, emotions really are the ultimate driver of any price of any market, regardless of fundamentals. I always say, take the price of a stock or crypto or any other asset for that matter. Its true value is what the willingness of what someone else is willing to pay for it, right? At any given point in time. That's the real value. In fact, it's gotten so significant, the bearish sentiment in the stock market, for example. Bears have been above 55% for 3 weeks in a row now. And this has happened, by the way, only one other time in history, and that happened to be March of 2009. We all know we had the Great Recession after that. So will we see that kind of correction this time? I don't know. It remains to be seen. It is certainly in the realm of possibility, but I do believe we're going to see significant volatility for quite some time because you don't turn this economic ship around on a dime. The U.S. economy is another great analogy. It's kind of like a big oil supertanker. Current administration is shifting, changing the direction of it. Decades of status quo being shifted. Again, trade policy, tariffs, taxes, all of these things, right? You don't turn an oil tanker on a dime. It takes time. There's almost only one certainty right now in this current stock market, and that is more volatility is coming. So expect it. Be prepared for it. Reduce your market risk. Reduce your exposure. Again, I share this all the time. Your personal bank, annuities, guaranteed lifetime income riders are all guaranteed. These are ways to put money aside, and particularly with your personal bank being insured, guaranteed, tax-free, and highly liquid. I don't believe this volatility is going to last forever. Of course, things are get better in the future, and I even shared that in the first segment. I believe we're going to go through some short-term pain for long-term gain. But that short-term pain might last for another year or two. That's a typical correction time period. And there are significant fundamental reasons for this occurring. The tariffs alone. Again, it's not the current administration that's causing the uncertainty. They're making their position clear. We haven't even seen the effects of a lot of these tariffs yet. That goes into effect April 2nd. The reciprocal tariffs, that is. The current administration has stated very clearly on April 2nd, whatever tariff another country is charging us, we will then turn around and charge them. Now, unless these countries come to the table and negotiate fair tariff levels, that will create some economic chaos there and volatility. There is no two ways about it. Because I've used the example of Canadian milk and cheese and chicken, for example, all having anywhere between 200 upwards of 300% tariffs. Well, if they don't change those things, that means chicken or milk or whatever that Canada was selling to the U.S., which currently I believe has little or no tariff on it, is going to have a 200 or 300% tariff. Well, that's going to fundamentally change those industries. It's going to affect supply chain. We saw what supply chains, all those kinds of things. We saw what happened with supply chains being disrupted with the COVID shutdowns. I believe we're going to see some of those similar types of things. Now, companies and industries will adjust, and we might, by the way, see some empty shelves on certain types of products. initially, like we saw with COVID. Unfortunately, with COVID, I remember it was shocking. You going into a grocery store for several months, by the way, seeing entire rows just of shelves completely empty. And these were in places like Scottsdale, Arizona, that were rather affluent. You couldn't, I remember it was over 6 months, couldn't find toilet paper anywhere. Now it eventually settled itself out, as this will too. But it will create, again, challenges, volatility, change, short term pain for long term gain. I mean, the reality is, think about this a minute. Why should Canada charge us almost 300% tariff on chicken, for example, and we charge little or nothing? How is that fair? Canada's supposed to be an ally of ours, a friend of ours. They are, I believe that. But why are they charging us almost 300% tariffs? If they're going to charge us that, we should do the same back. That, of course, will most likely bring them to the table, and they will realize economically, because we've used Canada as example, well over 10 times the economy, and something like about a quarter of their economy sells products into the United States market, where we're like 1 or 2% of our market sells into Canada. This is not a fair fight. I believe I don't believe we're going to get into long extended tariff wars. Most of these are going to be settled fairly quickly, but again, it's going to be volatility as these countries and politicians and leaders come to realize, hey, the game has changed. Taking advantage and charging high tariffs to the U.S. is just not going to fly anymore, even it has done for decades. The one big question mark, though, the one big challenge, to be fair, could be China. So stay tuned. We're going to discuss that a little bit more in the next segment. Don't miss it.
Stay tuned for more common sense from Ference. For more information, contact Ference at 866-268-4422 or yourpersonalbank.com. That's 866-268-4422. Welcome back to the Your Personal Bank Show with Ference Toth. Want more information? Contact Ference at 866-268-4422 or yourpersonalbank.com. That's 866-268-4422. Now back to the show with Ference Toth.
Welcome back to the Your Personal Bank Show. If you want to reach me, you can do so at yourpersonalbank.com. Yes, you will reach me. It's yourpersonalbank.com. So in the last segment, I was discussing some of the challenges and the volatility and the uncertainty we're going to be facing as these reciprocal tariffs go into effect April 2nd. Some of these countries are going to come to the table fairly quickly, most likely, and negotiate fair tariff agreements with us. Because again, the reciprocal tariff, we haven't even seen this yet. But literally, whatever another country is going to charge us tariff-wise, we're going to do the same. So really, the ball is in their court. That's what's kind of interesting about this. We're not saying what the tariff level is going to be with any given country. We're just matching whatever they're charging us. And in almost every case, they're charging us far, far more than we're charging them. So they're going to be affected far more by this than we will, because in most cases, their economies sell much more of their products to our country versus the other way around, because we're just a far bigger economy than, like Canada or Mexico or many of the European countries, whatever. The one big exception or challenge to that really could be China. That one's going to be a bigger challenge because China is the world's second largest economy. They do manufacture much of the products that we purchase. Now, I believe some of this tariff stuff, and we're seeing this as we speak, reshoring or bringing back manufacturing back to the U.S., which is one of the big goals of the current administration, which I think is a laudable goal. And, we need to make things again. Our country needs to make things. One that's going to create more good paying jobs, for one. Yes, the price of things could go up a little bit, but if more people are making more money overall economically, like a tide coming in, all ships rising. So yes, things might cost a little more to purchase, but overall, the average person will be making more. So it's a good offset. And then the other offset to that, by the way, which is not talked about a lot, is the current administration is talking about extending the current tax, with the Trump tax rules, and even reducing taxes further. In fact, Howard Lutnick, the current Commerce Secretary, has come out and stated that their goal as an administration is to eliminate income tax on any American earning less than $150,000 a year income, creating an external tax external revenue service to manage the tariffs to create more income that way versus taxing Americans. Hey, I'm all in favor of that. I mean, I don't know if they're going to accomplish that goal completely, but let's say they get halfway there. Could you imagine if the average American household, which by the way probably earns about 70, I think the number's around 75,000, were able to keep all of their income? No income tax, or at least federal income tax. By the way, a lot of the state income taxes would get eliminated because many of the states, either they have no income tax, some states, or the ones that do, state income tax is tied to the federal income tax. So they're either going to have to, well, they're going to have to change what they do too, right? But my point is, let's say your household makes 75 or 100 grand a year and you get to keep it. That would be one of the biggest economic booms this country would ever see in the history of this country. By allowing people to keep more of their money, they can choose what they're going to do with it. They can invest it, they can save it, they can buy stuff. Regardless of what they do, it's going to have a boost to the economy like we have, well, frankly, never seen. So these are very laudable goals, very strong goals that the current administration has. The more they succeed at it, the more of an economic boom I believe that we will see that could easily last for years, if not even decades. It would fundamentally change the economic future of this country. But again, we've got a change period. We got a transition period to go through. And part of that is interest rates. Recession, there's no question recession fears have increased. A lot because of the uncertainty, like I said, of the tariffs and various things that are going on. You don't want to be afraid of a recession. By the way, recession is a healthy part of the normal economic cycle. I did a workshop not too long ago, and folks there really appreciated this. Think of a recession as part of the normal economic cycle, much like we see the seasons. You know, there's a spring, summer, fall, winter every year, most places. Recession was the winter, let's say. Well, what does winter do? Gets rid of some of the excess, and it kills off some of the weaker stuff so that then we can have spring. You have to have a winter before you have spring. And that's in essence what a recession. It flushes out the waste and the weaker companies and things like that. And the strong, the strong survive, right? It's a part of the normal, healthy process of any economic cycle. And that's been one of my major critiques of the Federal Reserve is in the last decade or so, due to, the easy monetary policy and all these things they've been doing, they've been trying to interfere with the normal economic cycle. Well, you can delay it, but frankly, you cannot eliminate it. And if you kick the can down the road and push winter off, recession, further and further down the road, when it comes, it tends to come back with a vengeance because it's been building up steam for a while, if you know what I mean. Well, there's a number of reasons why I believe recession definitely is much more on the table. I've been discussing this for a while. We're overdue for it, frankly. There's no question. But I believe I'm seeing recession articles everywhere. It's amazing. It's pretty much almost a certainty, I believe, it's going to happen. And there's actually some benefits from this. You got to protect yourself. Like I said, reduce your market risk. Your personal bank, annuities, guaranteed income riders can do that kind of stuff for you. Also, your personal bank can let you re-engage because it's highly liquid after the recession is over. When it happens, it's going to be over. Opportunities will create themselves afterwards, right? Year or two is normal time frame. But my point is this. Now the Federal Reserve is starting to discuss and look at interest rate cuts. And the reason being is, again, if we go into a recession, the likelihood of interest rate cuts increase. Well, that would reduce the cost of borrowing. There would be significant benefits for many people. For example, purchasing a home. Lower interest rates, lower mortgage rates would help a lot of people purchase a home. Now, if you own a home and the value of it goes down, perhaps that's maybe not so hot. If you own stocks and the values of them go down, maybe not so hot. But you know what else a recession does? For those who want to buy, particularly many of these people that are younger or have put cash aside, like many of my clients, personal bank clients, waiting for opportunity to present themselves. It creates an opportunity. If you're fully engaged and you're riding the wave, well, you might ride the roller coaster down. I don't recommend that, but that happens. Now the question really right now is how we're already in a downturn. There's no question about that. Early 2025. The only question is really how long is this downturn going to last? Is this a simple market correction or the beginning of a bear market? Corrections typically don't last so long, but the average bear market does. Usually a year or two is typical. There's a lot of people who believe that this is going to be more than just a correction, and I kind of tend to agree with that because the reasons behind it are more structural. A lot of the reasons why the markets are concerned are the tariffs. And I do believe, regardless of what ends up happening with the reciprocal tariffs, overall, they're probably going to be likely higher than they are now because, again, the U.S. has little or no tariffs on most of the goods that companies are bringing into the country. There's likely going to be an increase in tariffs overall. Now, again, it'll bring more manufacturing, more jobs. There's a lot of positives to it, more revenue, so maybe income taxes can go down. That's also part of the plan. Overall is great, but it does impact, it's going to impact the stock market, at least negatively for a while. And that's why I've discussed this many, many times. Warren Buffett this past year sold more stock, both dollar-wise and percentage-wise, than at any time in his investing career. This one article discussing long-term investors should recognize that while stocks have risen over time, there are many periods where they fall. As they're saying right now, stocks risk is substantially exceeds the reward because the valuations have become stretched, they're overpriced, and we have market volatility, uncertainty with tariffs and various economic policies that are going to affect these things going forward. It's just a fact. And see, what the current administration is dealing with, here's a couple of the problems that they're dealing with and why they're doing what they're doing to address it. First of all, in the first 5 months of fiscal year 2025, which actually started last fall, the federal government operates on not on a calendar year. I think it's October is if each year is their fiscal year. So in the first 5 months of fiscal year 2025 for the federal government, the deficit is over $1.1 trillion, which is over $300 billion more than the deficit recorded in the same period the previous year. The deficit for the federal government is on pace to be about $2.7 trillion. They're estimating that the current spending levels the federal government is at is they're going to spend about $2.7 trillion more than they receive. The previous year, 2024, fiscal year 2024, they spent $1.9 trillion more than they received, which was an all-time record. These deficits, the amount of spending over revenues continues to increase each year. But there's even another problem that's facing the current administration right now in their face, and even if they cut spending and did all that immediately, it would not solve this problem. The U.S. government is facing a massive refinancing task. This refinance problem is about triple of the all-time record we've ever seen in the past. This is likely the number one reason why the current administration is taking the steps that they're taking. And the quickest way to resolve this, by the way, folks, is recession. The quickest way to lower interest rates is a recession. And the entity that would benefit from that the most right now as we speak is the U.S. government because of the level of debt it has. I'm going to discuss this further in the next segment. I'm going to encourage you to stay tuned because this is a topic I haven't heard hardly anyone, I haven't heard anyone discuss this anywhere. And again, as I believe this is likely the number one reason why the current administration is taking the actions they're taking and making the statements they're making. And probably the number one reason why we are headed into a recession in the very near term.
Stay tuned for more common sense from Ference. For more information, contact Ference at 866-268-4422 or yourpersonalbank.com. That's 866-268-4422. Welcome back to the Your Personal Bank Show with Ference Toth. Want more information? Contact Ference at 866-268-4422 or yourpersonalbank.com. That's 866-268-4422. Now back to the show with Ference Toth.
Welcome back to the Your Personal Bank Show. This is Ference. If you want to reach me, you can do so at yourpersonalbank.com. Yes, you will reach me. It's yourpersonalbank.com. So here's the situation that the federal government is dealing with and probably is the number one reason why we are likely headed into a recession in the very near future. There is a massive refinancing problem facing the U.S. government right now. We all know there's about $36 trillion of debt on the books. The federal government does not pay down the debt. In fact, what the debt is they sell bonds, government bonds, and they promise to pay a certain interest rate for a certain period of time. When these bonds mature, the government does not pay them off. They resell the bond at whatever the current interest rate is. Well, the problem is in 2025, about $9 trillion of U.S. debt is going to mature. In other words, the federal government's going to have to resell an all-time record amount of debt. And by the way, this is like triple the previous record. This is an incredibly massive amount of money. It's going to have to be resold at the current interest rates. Well, much of this debt was sold in the previous decade at much, much lower interest rates. This is part of the reason why the interest on the debt continues to increase. It's increasing for two reasons. One, the total amount of debt is increasing, so the total interest on that increases along with it. But the interest rate is also increasing on the new debt, the new bonds as they're sold. So it's like a compounding factor. Let me use an example. We go back about 3 years ago. The government would sell a 30-year treasury at about 2%. Today, it's like 4.5%. That's more than double amount of interest the government has to pay on that 30-year bond for the next 30 years. That increases the total amount of interest. That's bad for the debtor, which is the U.S. government. Good for the buyer, the purchaser, insurance companies, institutional investors, your personal bank dividends, all those kinds of things. That's why we're in the golden age of fixed assets and most likely will be for the next 3 to 5 years, if not longer. Some are saying Vanguard, for example, the next decade, because it's unlikely interest rates are going to go back down to the super low rates we saw, for the previous decade. I mean, I don't think anybody's going to see sub 3% 30-year fixed mortgages probably any time in your lifetime again. That was the lowest interest rate environment for the longest period of time we have ever seen in over 250 years. It wasn't a once in a generational situation. It was once in a 250-year opportunity. Okay, those days are gone. If you're purchasing these bonds to earn dividends or an interest, that's great. But if you're the seller of the bond, the U.S. government, that's bad. So who would benefit the most with interest rates dropping? The U.S. government. They're the biggest debtor in the world. How do you drop interest rates? Well, interest rates have stubbornly stayed rather high, higher than average, certainly. The quickest way to reduce interest rates, is to have a recession. If we go into a recession, the Federal Reserve will likely start dropping rates pretty aggressively, which means all this debt, this $9 trillion of debt that's coming due, has to be resold, could be sold at a lower interest rates, which would benefit the U.S. government. I believe the current administration knows this based on their actions and statements and have come to realize that this is their best and maybe only way to resell all this debt without having to pay an exorbitant amount of interest, which would set back the U.S. government spending and interest for decades. This is a huge, massive problem. The U.S. government needs a rate cut more than anyone. President Trump has stated he believes short-term pain is his only option to lower interest rates and refinance this $9 trillion plus of debt this year. And it all comes due this year, so it has to happen quick. So I believe we're going to go into a recession quite quickly. But on top of this, the markets are starting to price in some tariffs that are probably going to happen longer term. This isn't a posturing tactic, but it's more of a material change, as I stated earlier. So this change in thinking, it's been further confirmed on a recent interview. President Trump stated he acknowledged that we're in a period of transition and it will take a little time. Those are quotes from him. He also stated that he's truly not concerned about a crash in asset prices. I don't know if you remember in his first term, he would discuss or watch the stock market almost every day. Today, he's saying he's not even concerned about that. He's not watching the stock market. In fact, Commerce Secretary Lutnick stated recently, the stock market is not driving outcomes for this administration. Treasury Secretary Bassett today said he's not concerned about a little volatility. So it isn't just Trump, it's in his entire cabinet. Scott Bessent recently stated, the market and the economy have become hooked, become addicted to excessive government spending, and there's going to be a detox period. They're telling us what's going to happen. Even Elon Musk is on board. He has stated recently, His stock prices from the peak have dropped 50% with Tesla. And his response? It'll be fine long term. He's on board with this too. Treasury Secretary Bassett said funny money propelled stock prices for the past 4 years, and they're simply returning from orbit to more sustainable levels. Again, they're wanting to reduce interest rates and inflation. They want to reduce the interest rates because they've got to refinance all this debt this year. And of course, as Secretary of Commerce Lutnick stated, their goal is to eliminate income taxes for anyone earning less than $150,000 a year, again, by using tariffs and other methods. So these are all statements recently that have been from Trump himself or his cabinet secretaries. They're all on the same track. Secretary Lutnick also even pointed out it's time for a radical shift. We're going to make the external revenue service replace the internal revenue service. No more, as he pointed out, no more tax of the citizens. And on April 2nd, the reciprocal tariff policy when that takes effect. How you treat us is how we'll treat you. And they're bringing manufacturing back to the United States. So my point is this, there's going to be volatility in the markets, and the current administration and the cabinet secretaries are not concerned about it at all. In fact, they're expecting it. Protect yourself, reduce your market risk. If you haven't considered your personal bank or an annuity or guaranteed income rider, there's never been a better time in over 40 years because the numbers, the rates, it's a golden era of fixed assets. Contact me at yourpersonalbank.com. There's never been a better time. Now, this whole idea of taxing citizens, the IRS, fundamentally, I believe was a major error, and I'm glad this is being addressed. Because what it did is it put the U.S. government in a adversarial relationship with its citizens. It's at its very basic level, a government is designed to protect the citizens, protect the border, protect the citizens from crime, keep them safe, try to keep them out of wars. From a very fundamental basic standpoint, that is the purpose of government. Government should be a benevolent factor. It should be, again, a positive or a protection, keep the citizens safe, allow them to thrive, provide a fair playing field economically, and etc. By taxing citizens, the IRS, the Internal Revenue Service, again, it's an adversarial relationship. It's a debt collector going after citizens. Often said, you're guilty until proven innocent with the IRS, right? By creating and replacing it with an external revenue service, the government now moves back into a more benevolent posture with its citizens, which is where it should be. You see, the IRS can audit Americans at any moment. Why shouldn't Americans know exactly how the government spends their dollars? It's our money. We should have the right to know what the government is spending money on. And some of the things we've learned about recently are absolutely shocking. Here's one I've learned about that I think is going to affect the real estate market significantly, and I haven't heard about anywhere. According to the Wall Street Journal, the Biden administration has been paying the mortgages for over 1 million homeowners to prevent them from going into foreclosure. Obviously, the Trump administration is not going to continue that practice. So what's going to happen when these people who got into financial trouble, unable to pay their mortgage, the government, well, by the way, the government wasn't paying their mortgage. We were, the taxpayers, we were paying the mortgage for these people. What's going to happen when that stops? I believe, of course, that will have a negative impact on the real estate market, which is already struggling with higher interest rates and inflated values, which I believe both are going to change. By the way, lower borrowing rates will just give us more positive arbitrage with your personal bank. We have higher dividends, increasing dividends because of the higher bond interest rates, but then we get a lower borrowing rate situation with the Fed lowering rates most likely. We're going to see bigger and bigger positive arbitrage. Frankly, we couldn't be happier. We're moving into a situation with your personal bank that might be some of the best we've seen in decades. It's already really good and is quickly moving to even better and better situations, all at the same time at a point in time when the stock market's struggling and likely facing significant volatility ahead for the next year or two at least. This is from Senator Rick Scott. People are fed up with wasteful government spending. You know, in the last 5 years, we've had a 2% increase in the population and a 53% increase in spending. Think about that. Our population in the last 5 years has increased 2%, yet our government spending has increased by over 50%. This is unsustainable. It has to be fixed. And thankfully, we have an administration that is taking steps to fix it. There's going to be short-term pain, I believe, for long-term gain. The best thing you can do is protect yourself from that short-term pain, the volatility, and all that's likely going to happen over the next year or two. Protect your downside. Reduce your market risk. Consider your personal bank or an annuity or guaranteed income rider. Contact me at yourpersonalbank.com. It's the best time in over 40 years for these assets. It's the golden age of fixed assets. Never been a better time. As always, stay tuned next week to the Your Personal Bank Show, and as long as it's on our money, in God we trust.
Listen Tuesdays at noon and Saturdays at 1 to the Your Personal Bank Show for more information. Contact Ference at 866-268-4422 or yourpersonalbank.com. That's 866-268-4422. This show is designed to provide accurate and authoritative information. The presenter and guests of this program do not engage in legal, accounting, or tax advice. Professional advice regarding your situation should be sought if required. Some products discussed may have limitations and not be available in all states. Excessive unpaid loans may affect performance. Distributions may become taxable if not managed properly. Replacements may not be suitable for everyone. There may be charges when replacing coverage. Dividend rates and bank line of credit rates may change. For current rates, contact Ference at 866-268-4422 or yourpersonalbank.com. Again, that's 866-268-4422 or yourpersonalbank.com.